Hello traders and welcome to another video review. Today is Thursday, 29th of April 2021. Let's take a look at the Forex calendar. It looks like we are going to be a little bit busy today. Some data of course had been released overnight, but none of them were that much important. We are waiting for the data from German labor market. Unemployment rate and unemployment change are about to be released. Unemployment rate in Germany should stay in line with the expectations of 6%. And the other kind of important data from the Eurozone are money supply, private sector credit, and of course consumer confidence from the whole Eurozone. At the end of the day, at the end of the London session, there is a CPI, harmonized CPI data scheduled for release at 1 p.m. from Germany. There is no inflationary pressure in Germany. The previous reading was 0.5% on monthly basis, and this month forecast is 0.4%, so there is no inflationary pressure. During the New York session, we have a GDP data from United States, of course, for the first quarter, and that's the key economic release for today. The forecast is 6.6%, which is way better than 4.3% last time. So kind of interesting what is the actual number here. Unemployment claims scheduled for release 1:30 as well. They're trying to rise a little bit from 447 to 560,000 claims. So that's about it. If we take a look at the calendar, and let's just I think we should start with the US dollar because of the FOMC interest rate decision yesterday and the statement and the overall impact on the US dollar. What can we see? The first thing is that the Fed sends the US dollar lower. We have a new low at the level of 90.39, so we are now below 90.92, 91.28. Those levels were the key technical support for the market, and as you remember, we've been following this ABC counter trend bounce towards 93.42, and since then we are following the another wave down scenario, which might be kind of a impulsive in nature. This move down here inside of this channel labeled as a wave A might be labeled as a wave 1. So this is 1 or A, 2 or B, 3 or C. We will see at the end, when this move is completed, what is exactly the correct labeling. The main difference is that it will be either continuation of the free wave correction, or it will be some sort of the new trend to the downside made in impulsive manner. As you can see, the RSI is very close to the extremely oversold conditions. The level of 30 points had been almost hit here, so we are waiting for a bounce, and this bounce is being reflected here on the chart by the wave B. So right now the wave A is about to be completed, and we are waiting for a bounce from oversold condition in wave B. So that's the US dollar index. What is going on gold? As you can see, there isn't much of a reaction here on gold. We got this bounce from yesterday from the 1766 1760 zone, which is the key short-term technical supports zone. So as you can see, we are out of the channel, but there is definitely no breakout to the downside. We are just out of the channel, so right now we are not trading inside of the channel, which was a good sign for the bulls, because that of course might be kind of a positive, and for the future, for the next levels for the bulls. 1859 was the next target. After 1806 had been hit, but none of this happened. We got something like a consolidation here, and apparently if the spot gold market will go down, that means the people are selling gold and buying dollar, which means the US dollar index might be in wave B to the upside, as I just said a few minutes ago. Let's take a look the SP 500 index. New all-time highs made today and yesterday. This is a short-term trend line. Right now we had a bearish sandwich here, but then we bounced. We hit 127% of the Fibonacci extension of the of this wave here, as you can see. So we are now trading above 4,140 and 81. We are actually made 4,201 points, new all-time high on the S&P 500. But please pay attention to these developments here, because they are being made during the negative divergence between the price and the market. So if we break below the lows of this bearish sandwich, which is around 4,120, we can go lower towards 4,800 and 4,084 points, and then of course trigger the move lower towards 4,000 points on the S&P 500. What is then going on the other index, which is the Dow Jones Industrial Average? This is even more interesting. A chart, because we got this consolidation here, almost kind of a similar to the S&P 500, but there is no new high. Instead of that, we have a down candle here. Of course, this is a daily time frame chart, so there's a few hours before this candle is closed. But please pay attention that there is no new high. For 34,245 is the high on the Dow Jones, but if we break below 33,605, then the Dow Jones might go lower towards 33,000, or even extend the move to the south. This channel, which is a very interesting channel, the main one here, I will just get a little bit extended. Okay, so that's fine, we will leave it here. But as you can see here, we have another channel. Which is acceleration channel. We might use it here, and as you can see, the market is already out of this acceleration channel. So the channel techniques are kind of important here, because they are showing us, I will make it black. Okay, the black channel with the yellow inside. Okay, it's maybe this one. Yellow inside is right now the acceleration channel, and the market is actually out of this channel. Very interesting chart right now. That means we are losing steam. We are losing steam in the Dow Jones Industrial average, and of course the momentum is clearly down. It's right now 57 points. So any movement below 33,605 will likely result in test of the level of 33,000, and that would mean the RSI will drop towards the level of 50, which is the neutral level. So it's it's on the edge of going lower, and bears control the market, at least in the short term, because of course in the longer term we are still trending up. We are still in an uptrend on the Dow Jones, but there are still some sort of the divergence played out here, and they are not being executed properly. They are not being right now recognized by the market participants. So this might be kind of an interesting level, 33,605, to keep an eye on, because any violation of this level would likely means a further slide towards the 33,000. So please keep an eye on the level here. I got my blue arrow here, 33,605. So that's about it. That's about everything that mostly everything that US dollar is being connected to. And at the last, we can take a look at the crude oil the futures, so we can see what is going on here right now after the channel breakout and the very nice 5-wave down retracement. The market is confused and it doesn't know what it wants to do really, so it tries to going back up again, but I think this is still just wave B in progress, much more bigger in a time, much more longer in time, bigger in price than usual, and it looks like we are about to complete this wave B and then of course reverse from around 65.19 a little bit lower. Please notice this is daily time frame chart, and this correction here is the biggest one that we had since the last year. I think, yes, this is 2020. So that move up might not be actually nothing new for this market. That might not be as beginning of the new trend. It looks like a particular correction in a wave B of the cycle, and please notice that this momentum is not that strong anymore. And if we reverse around the level of 65, then of course we can expect the crude oil to go lower below the level of 60 towards 57 and even lower. So right now this is how it looks on the daily time frame chart on the crude oil, which is somehow, as you know, connected to the American dollar as well. So that's everything for me for today. Thank you very much for watching this update, and I hope I see you guys tomorrow on Friday, last day of trading for this month. Thank you very much. Take care and bye bye.